Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, the 18th of June, 2018, getting on to 1:55 p.m. Central Daylight Time. So while you're seeing a slide up in the gold and the silver right now, the reality is silver really settled closer. And I'm talking the finish date of 1644, the gold around the 1280 level. You were down from here on the settlement price, even in the copper, about $1.60. So yes, we're getting a bounce, but that's all that it is late in the day. And we're starting to see a fade in the rally that we had early today, well, in the past 30 minutes today, in the stock indices, which carried the Russell to new highs, actually, and now it's starting to give those up. Dollar index pretty much unchanged, so it's maintaining its strength against practically everything. And obviously what you know already, and the questions you have to do with the Chinese-U.S. trade wars, and of course that with our allies, be it Japan, be it Canada, be it Mexico, it's all over the board. And this won't end until enough pressure is put on everybody, including us, the U.S. citizens, where we rebel against this and get our president to say, or his counterparts in other countries to come to him and say, let's solve this issue. He's already tried, and nobody came to him. Maybe this will get their attention. That's one way to look at it. What's hurt the gold market is you would think that all this is inflationary, and it is. I mean, any good you put a tariff on, you've raised the price of it if you're bringing it into the U.S. And normally, you would think that's having an inflation impact. Gold's not really looking at it just yet in that manner. When we look at a gold chart, and this is a weekly chart of closes, you can see how the market has fallen from 1353 down to the current level around 1277, a heck of a break. The market caught everybody on Friday. Now let me explain that. If you look at this chart, I had been saying you have a congestion chart, and I had asked the question right through here, if we took out this high, and this was Wednesday of last week, is that going to be a breakout? And I will come and show you what I was getting at on the Bollinger Bands in a minute here. But the market was certainly looking better there. The key was not to get back under this level right through here, and certainly not under that low. And instead on Friday, the plug got pulled. The market fell apart, literally, down on the day nearly $30. And as I said, today it hasn't really gained anything back. You're having an inside trading day, and the settlement's closer to 1280. So you've got a problem in the market as you see it. When you look at the swing line, and I come back, and it's always fun to come back a day, you can see how the market had made a lower low, higher high, trying to figure out what to do, and then it fell apart. Not good action there either. When we look at the moving averages, prior to Friday, the market certainly looks like, hey, is this market breaking out to the upside? I was thinking it had, and then the question is just not getting back under these lows, which it wiped out in no time at all. In terms of Bollinger Bands, let's take a look at this, because you can go back to the videos we had, and the question was, is the market going to be able to push this band out, or is it just running into in the sideways action atop there, possibly looking for support at the lower band if you get through the 18-day average? You just sliced through everything, giving it a false move to the upside, a breakout, and then follow through today in the sense that you haven't even rallied back over the lower Bollinger Band. You've decimated the bulls at this point in time. In terms of momentum, you have gotten yourself oversold. Now, the prior oversold conditions, like here, have resulted in getting a bounce back in the market. So it's got to restructure at best if it gets a rally. But the bears have control. But yes, the market is at some numbers here that, like you failed on the upside, if you tomorrow had a big rally, is it no more than a short covering rally, or is it something different? Right now, to me, it would only look like short covering. When I come to GLD, the popular ETF, let's take it right here. Look the same way. I'm thinking breakouts. I think most traders are looking for breakouts at that point, hoping to see the support hold at 122.95. You did not have a bullish pattern. Why do I say it? You have a higher high and a lower low. I thought I was mentioning that, and then it just came apart. And like the gold itself, you've got 2 days under the lower Bollinger Band. Now, the importance of that is that only 5% of the time will the market close outside of the Bollinger Band. And when it closes outside of that band, I, as a rule of thumb, take each one of the successive days and assign it one of those 5 percentage points. So I give the market tomorrow a possibility, 97% possibility that the market's going to try to get over that Bollinger Band. But two things happen in the math. Because of how you're going, the band's going to drop tomorrow, and it won't take much in sideways action to stay over it. So it does not mean you're getting bullish. It just means that the market's likely to get over the band. And yes, I will stick with what I said. The first challenge of an upper band or a lower band is often where you get to see traders that are long coming out in long, shorts coming out of shorts. You can see how it works there. I can take you back on the chart. Does it always hold? No. Here you held, you bounced, then you started riding the band. Here you didn't even try to hold it. You just got underneath it on that washout. When we come to GDX, this market has stayed within the bands much better than any other part of the gold complex. Look at how it's just paying attention to upper and lower bands. It is not in a trend. It's in sideways consolidation that if you get and start pushing the band down, you got to get super bearish. If you can start pushing the market through the upside bands, you got to get bullish. But it hasn't done either. It has literally sat in this sideways configuration since the beginning of May. When we come to the gold-silver ratio, gold is holding up a bit better than silver. And why? Because the ratio went down as low as 75.79 ounces to buy an ounce of gold. It had been at 82.43 in April, fell back, and now you need a bit more ounces. In the silver market, you get to see that because this market had a terrible failure again. This gray line right here is the 200-day moving average. The upper Bollinger Band is right here. And on this day of last Wednesday, the market's trying to develop an embedded reading. Both numbers are now approaching the 80 level. They're there on Thursday. So you've got both numbers over 80. The market riding the upper Bollinger Band with a pattern of higher lows and higher highs. The key in the market is on a pullback to try to stay over the 200-day average and at a minimum respect the 100-day at 1669 and 1666, the 18. What you don't want to get is under the most recent low of 1607, but you really want to stay within the bottom band. The market instead falls through everything on Friday, doesn't get through the lower Bollinger Band, but it destroys the up channel. You now have a higher high and a lower low in your under key averages. You have today an inside day. You have the 18-day average under the 100. We have not had a bullish crossover. It got right to it. I call this kissing it. The two were getting together, and had the market stayed up, you had thought the market would be able to get over it, and I was getting much more bullish. Moving averages are a lagging indicator in most cases, especially simple arithmetic ones. Exponential can be a little bit different, but they failed. So they had what I call that kiss, and this market's now got to figure out what its next move is going to be. In the copper market, you don't need me to tell you that if you get into a tariff trade war with China, the need for copper starts slowing, the Aussie dollar starts falling with it. You've come from 331 all the way back to today's low of 309. This isn't because there's too much copper, it's because of the trade wars that is going on. The market has a pattern of a higher high and a lower low, a heck of a market to even try to catch, just slip sliding around. In the platinum market, you closed under the lower Bollinger Band on Friday. Momentum turned on. You have a higher high, lower low. Again, the market trying to break out. and you've got the second day under the lower Bollinger Band. It can climb back into that sideways action very easily by rallying tomorrow. You could get these Tuesday reversals. Not saying you will, you could. There's no reason to be long, and there's no reason to be short on the chart the way I'm looking at it. You have a higher high, lower low, oversold. You got market diversions all over the place. In the palladium market, this is a bearish market right now. We had said earlier that it had lost its bullishness back here, but now it's got lower highs, lower lows. It's not oversold. It's pointing itself down. It's under the key averages. You'd have to get over 1012 in order to negate the downtrend. Yes, it's holding the 100-day average on the first challenge, and the dollar index, while it got over the upper Bollinger Band, it's pulled back to basically trade against it right now. And the question is it going to stay in this overall sideways pattern or start pushing to the upside? It is overbought. Again, a son of a gun market, which makes for a live webinar this coming Thursday to be fun, because we'll get to look at the charts together, talk about what's going on, and see what we should do. Now, I'm going to send out invites to a select group of people starting today. If you don't get one by tonight, it means you should call our staff to get an invite to it. It is limited seating. It is free. You'll need a password that comes in the invitation. In other words, you'll get the invite, you register, then another email sent to you with the password for this. And yes, I will be changing passwords. I always do. Give my staff a call at this number if you don't get the invite. Other than that, I'm Ira Epstein. You have a good day, and I'll see you all tomorrow.